can say a critical examination question, important examination question, specifically to understand the provisions of law. This question has been asked a few times already in the examination. We will be doing, I would be doing basically 2 questions in this, but first let's discuss the first question. Let me read out the first question. Neptune is a ship liner used in carrying passengers and cargo, owned by Messrs. Thomas and Thomas of U.K. The ship carried the passengers and cargo in June 23 from Singapore to Mumbai and vice versa and collected charges of Rs.200 Lakhs. It left Mumbai port on 15th of June 2023 for its journey to Korea. No other journey has been undertaken by the ship into India. So discuss the procedure and the taxability. See, when this question has been asked in examination condition, you have to think of 2 important sections. I would like to give the answer considering the 2 sections relating to the shipping business. You would have studied about this section called section 172, which says the income of the previous year will be taxed normally in an assessment year, but there are some exceptions. Section 172 is an exception. We studied that, meaning the income of the previous year is taxable in previous year itself. That is the regulation we studied long back. We have been studying this in intermediate as well as in your commerce, UG, PG, everywhere we should have studied this section. So in the CA condition, examination condition, this has been trickily asked, set up by the examiner. So here 3 conditions in the question given. Who is the owner of the ship? Ship is owned by a non-resident. Condition 172 has been fulfilled. Next, the ship collect income in India. That is also given, around 200 lakhs or something like that, and income has been collected. So the income has been collected in India. That's been given. Now, what is given in 172? You have to explain this in a detailed manner. 172 prescribes, in case if there is a ship owned by a non-resident earned income in India, a port clearance from the tax officer needs to be obtained. A presumptive section or a presumptive tax needs to be paid, nothing but 7.5% of income will be treated as a presumptive income. So when this tax needs to be paid, the tax needs to be paid before the ship leaves India. Only then the port clearance will be given. So the tax has been paid when the ship, before the ship leaves India, the taxes has to be paid. Okay, who has to pay? The master of the ship needs to pay, or any other person authorized by the master of the ship has to pay and file the return. When you apply this 172 presumptive income, 7.5%, no other expenditure will be allowed as a deduction. So in the given case, the income earned by the ship is 200 lakhs into 7.5%. So 200 lakhs into 7.5% is 15 lakhs has been treated as an income. So this 15 lakhs will be treated as a presumptive income and the taxes needs to be paid accordingly. This tax will be paid as an advance tax. This is one part of the story. Coming to the second part. Okay, the ship leaves. Now can the assessee opt for a regular assessment? because there could have been some expenditure incurred. Can the assessee opt? Yes, the assessee can opt for a regular assessment under section 44B. After the financial year is over, of course, he has to give an intimation to the assessing officer about his intention to opt under a regular assessment under section 44B, and there he can opt for a regular assessment under section 44B. Friends, here when you answer the question, talk about 172, talk about the exemption previous year, income will be taxed in the previous year itself. That's what is happening. 15 lakh is the presumptive income. After the presumptive income, on that the tax needs to be paid. This is all story number 1. Story number 2, the assessee can opt for the regular assessment under section 44B. He has to give an option to the assessing officer and get himself assessed under section 44B under regular provisions of law, under the profits and gains of business operation. That's it. See, there is another question being asked. When you do the regular assessment under section 44B, the question asked, can the brought forward loss and the unabsorbed depreciation can be claimed as a deduction, can be claimed as an adjustment? Answer is yes. When you do a 44B, it is permissible. When you do 172, it is not permissible. So that is what you have to answer. So logically, 172 is a compulsory section. Complete it. Assessee come back, give his intimation to the assessing officer about his intention to opt for a regular assessment, claim brought forward loss and unabsorbed depreciation, and do the assessment under section 44B.